world headquarters, I'm Charlie Pellet. First trading day of the new month, we've got a rally on Wall Street. Final hour of trading. The Dow, the S&P, NASDAQ 100 index, very close to session highs. Stocks are advancing in a broad-based rally led by technology giants, as several strategists say the recent explosion of speculative buying will not derail the bull market in equities. S&P 500 on track for its biggest gain in more than 12 weeks. Right now, the S&P is up 66, again close to session highs, up 1.8%. The Dow's up 313, higher by 1.1%. NASDAQ up 338, up by 2.6%. 10-years down 330 seconds, 10-year yield 1.07%. West Texas Intermediate crude up 2.9%, 53.69 a barrel. Gold up 0.7%, 18.59 the ounce. And silver, an ounce of silver up now by 7.5%. The silver iShares ETF up by 6.9%. What about the economic backdrop and optimism about vaccines? Megan Hornman is Director of Portfolio Strategy at Verdence Capital Advisors.
This very slow rollout of the vaccination, that's only prolonging us being able to get back to normal. Our base case scenario is the second half of this year. Once we get more distribution of the vaccines, that will have better economic growth and then your economic expansion.
Ryanair Holdings is counting on a rapid rollout of vaccines to deliver a late summer travel surge and help the low-cost carrier recover from an annual loss that could reach 950 million euros. The ADRs of Ryanair up now by 1.8%. JetBlue Airways has remodeled its premium Mint cabin for the company's transatlantic debut flights to London later this year, changing the seats into suites with sliding doors and adding 2 larger studios. Recapping, stocks higher, S&P up 66, a gain there of 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. First of all, just playing off of what we heard from Charlie, I was looking at those JetBlue mini suites.
What do you think?
2 people, yeah, I'm all in.
Yeah, I mean, when you get your vaccine, right?
Yes, when I get my vaccine. But you kind of love those little cubicles where you're kind of closed in. It's like kind of like a mini New York apartment.
That's a good point.
Feels that way. But you're right. When we get that vaccine, headline: we just want to make sure everybody saw Robinhood in talks with banks and raising $1 billion in debt. This is coming from Reuters. I mean, they've already been getting a fair amount of cash infusions here, right?
It is remarkable, Carol. The company has raised an additional $2.4 billion from investors. That comes after it raised even more money last week. So $3.4 billion in addition to what Reuters is reporting, this $1 billion in debt.
Well, and listen, it spoke to what you said earlier. You know, if we're worried about, people saying, no thanks, I'm not interested in using Robinhood anymore. Investors are interested in still pumping money into it. And we did hear that Robinhood from Andy Massa saying that was it like 600,000 new downloads of the platform?
Yeah, it was at the top of the charts last week in Apple's App Store. And look, I think from the marketing perspective, it has a lot of work to do from a reputational perspective after what happened last week. But look at the way that investors are being bullish on it. Those venture capitalists are they want a piece of it.
Voting with their money, certainly showing their opinion. So, okay, we have been obsessed with GameStop. We were last week, and I do remember we had guests reminding us that there were some really other important things that were going on in the world, including the pandemic, earnings, a massive COVID relief plan. And as Bloomberg New Economy editorial director Andy Brown writes about in his weekly column, we saw both Wall Street and Washington take some big steps on going green. Andy joins us with more on the phone in New York. Andy, good to have you here. Tell us a little bit about, you're right, there were so many things that were so important last week that were going on that really got overshadowed. And tell us about what you wrote about, specifically when it comes to the green movement.
Yeah, so it just seemed to me that, all of these day traders bidding up AMC last week was really detracting or drawing attention away from one of the biggest stories of our time. Certainly, a story that is in the process of reshaping the whole global economy. And it was so startling that last week you had this alignment between Washington and Wall Street on net zero. that you had Larry Fink, who manages or something like, oversees something like $8 trillion of investment, coming out and saying, look, if you want our investment, you've got to start publishing plans to get to net zero by 2050. At the same time that the incoming Joe Biden administration is announcing a raft of programs for a fully clean energy network and carbon neutrality by 2050, in line with a whole bunch of other countries, not least UK, Denmark, New Zealand, and so on, i.e., the balance you put out, whatever you're putting into the environment in terms of carbon emissions, you've got to take out net zero.
But Andy, I do question the timeline here, because 2050 is, look, that's a long time. That's 29 years. Contextualize that for us, because it does seem like a big deal, but at the same time, that's almost 3 decades.
Well, you're right. I mean, in some ways, 2050, never, never. Some of us may not be alive by then, but on the other hand, we're talking now about pathways, and Fink's point is, if you don't have a plan to get to net zero by 2050, you don't understand the biggest opportunities in front of business today. So that will include, a la the Joe Biden plan, clean energy, but also includes clean mobility. It also includes smart cities, everything that goes under this rubric of net zero. So in his view, and look, he's coming at this climate issue. Yes, he has his own personal views, and it's informed by his own personal experience, like going fishing in Alaska and discovering he can't breathe because the tundra is on fire in Siberia. But he's coming at this from an investor perspective. He's saying, company management need to be on top of the opportunities and the flip side of this, the historic risks, and not just the risks from rising sea levels and hurricanes and the kind of crazy whiteout snowstorms that I'm looking at right now out of my window in New York, but also shifting regulation and reputational damage to companies that haven't figured this out.
Right. It does feel like, and you guys at, New Economy, Andy, I think are, bringing this together, kind of the private public sector in terms of moving this forward and what we're hearing. And I remember a story last week that talked about the Norway's sovereign wealth fund. They dumped a bunch of oil stocks. They've been losing money on those investments. And, that was a pretty significant trade for them. So we are definitely seeing this, a lot of momentum and a lot of pressure from the investment community. I have to ask you before you go, because we'd be remiss, knowing your background, you're a China editor, senior correspondent and columnist at the Wall Street Journal. You know China. Myanmar, the developments over the weekend, and what kind of response we might get from the Biden administration. How do you see it? What's key that you think our audience needs to know about here? Just got about 50 seconds.
Well, from the perspective of China, of course, is extremely influential, and it will back the generals every step of the way, as it has done. It's hard to know from a U.S. perspective what the U.S. can actually do in this situation. I mean, look, we're coming out of a nominally democratic regime that presided over, as we were talking about last week, genocide against the Rohingya. So what sort of democracy is it that we're defending here? And the personality, of course, of Aung San Suu Kyi, who is now a deeply ambivalent figure. So what are we defending here in Myanmar? And it's hard to know really what the United States can actually achieve beyond ritual denunciations and messages of concern for the people of Myanmar.
All right, going to leave it there. Andy, thank you so much. Always appreciate it and always thoughtful. Andy Brown, editorial director at Bloomberg New Economy, on the phone in a snowy New York City. Let's get back to world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Joe Biden will be meeting with 10 Republican senators at the Oval Office this afternoon. to hear more about their $618 billion counteroffer to his $1.9 trillion COVID-19 relief package. But congressional Democrats are not waiting on a compromise proposal. Bloomberg's Emily Wilkins says they feel they have the upper hand.
A number of Democrats, particularly progressive Democrats, have said that, you know what, we control the House, we control the Senate, we control the White House. We need to move aid for the American people. This cannot be a repeat of 2009, where we didn't pass enough federal aid to combat all the effects of the 2008 recession.
We do know the Republican proposal features a scaling down of stimulus checks to $1,000 with tighter income limits, while Biden's proposal calls for checks of $1,400. The Biden administration is adding another tool to its fight against COVID-19. Senior advisor to the president, Andy Slavitt, says they're awarding $230 million in funding to Ellume Health for at-home coronavirus testing kits that can produce results that are 95% accurate.
Thanks to this contract, they'll be able to scale their production to manufacture more than 19 million test kits per month by the end of this year.
The nasal swab test allows users to put the sample into a digital analyzer that will send results to your smartphone in 15 minutes. President Biden is threatening new sanctions on Myanmar after a coup that saw the military arrest the civilian leaders of its government. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. You know, I had such a routine when I was working from home for like 9 months straight. And I came, I'm working from home after being now back in the office a couple of months. And I'm like, I'm kind of lost again. It's
you
like
wouldn't know it, Carol. And also, I just want to check, what's the New Jersey snow report right now? How's it looking out there?
It's gotta be 10 inches or a foot already, easily. There's I can barely see outside my window because it's just full of snow. But it does look like it has stopped, maybe? Can you tell outside the window in Bloomberg? Has it stopped in New York?
No, it's still coming down a little bit, I think. It's hard for me to tell. I'm in a studio and there are a few windows out there.
Yeah, it looks like it's actually still coming down a little bit. So in the meantime, it's a very different New York. And I feel like snow is one of those things that I went to school in the city, and it was just, we loved it when we had a snowstorm because it just made the city stop and you were out, playing in the streets, throwing snowballs and everything. Because it's the one time you could do that. I've got to say, it's been really, tough to watch New York right now because it's been a very quiet city.
It has. And look, I'll tell you what, the only reason I'm able to be at the office today is because a bunch of us came in from where we lived, stayed at a hotel last night.
Yeah.
Including everyone here who's making it possible for you to listen to us today. So deeply appreciate that. But I was walking into work this morning very early, and I live in Brooklyn, I haven't spent much time in Manhattan, and I walked by so many shuttered storefronts, Carol.
It's remarkable, right?
It is remarkable. And I got to tell you, the office supply is now reflecting that as we get more and more data about office space. It's not just retail, it's office space as well.
Yep. We've got a story, a record amount of office space available right now in Manhattan with workers stuck at home. The office availability rate rose to 14.9% in January, the highest in data going back to 2000. That's a long time. We're talking 20 years.
Yeah, that's right. Leasing fell by nearly 47% from the same period last year, coming even as rents dipped for the seventh straight month to $73.65 a square foot on average. That's the lowest in almost 3 years.
And we talked real estate with the head of Colliers US last week, and seems to think that things will come back.
Yeah.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. House Democrats have filed a budget to begin the stimulus push. Let's head right over to the First Word breaking news desk for today's afternoon call. An update on Wall Street. Here is Bill Maloney.
And good afternoon, Charlie. That's right. U.S. equities are climbing after Friday's sell-off, with the Dow currently up 300 points. S&Ps are up 64, while NASDAQ climbs by 2.6%. The U.S. 10 yield at 1.07%. Gold is up 12, and transports gain 141 points. Among the main 11 S&P sectors, all were in the green, led by gains in tech and consumer discretionary. In the Dow, leaders were Microsoft, Visa, and Intel, while Walgreens led to the downside. In other news, Boeing still faces an SEC probe after reaching a deal with the DOJ. Robinhood is in talks with banks on raising $1 billion in debt. Apple is selling $14 billion in bonds in 6 parts, and Ford and Google are in a 6-year partnership for connected vehicles. Wrapping things up, NXP Semi and Vertex report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on, and Charlie touched upon this, and certainly something we're watching as well, the news flow out of Washington, Tim. And we know the president's trying to get through that massive COVID relief package, but it may not get through in one big piece.
Yeah, it's looking increasingly likely. Look, Democrats want something that's $1.9 trillion. Yeah. Republicans are saying, hey, we want something closer to $600 billion.
That's a big gap. All right, let's get the latest on that. Bloomberg News U.S. economy reporter Katya Dmitrieva is on the phone from Washington, D.C., and she joins us. Katya, good to have you here with Tim and myself. So what do we know so far, and what are you hearing about the prospects for this economic plan?
Hey, good afternoon. It really depends on whether we're looking at sort of what the economics tell us versus politically sort of what Biden has to do here. We had 2 pieces of news coming out in the past few days. One of them this morning with the CBO report showing that the economy is actually doing really well, just thanks to the last round of stimulus, the $900 billion. And so you get data like that, and you already have some Republicans out in front of this saying that this clearly signals that more targeted stimulus is needed. And then last week we had a report from another economic outfit, Opportunity Insights, that's Raj Chetty of Harvard and others, who said that more targeted stimulus checks are actually the best way to do this, and perhaps allocating some funds to sort of social safety net programs. So there's sort of the economics of it is showing that maybe more targeted stimulus is better. You have Republicans obviously saying that, Democrats highlighting, well, hold on, let's look at the labor market. Let's look at the jobs numbers. We see that more than 10 million people are still unemployed than were pre-COVID. We need to do more rather than do less because the risks are higher. So that is really encompassing the debate that's happening right now in Washington.
Okay, so when we say targeted, what exactly does that mean?
It depends on which component, right? So if we're talking specifically about checks, it could mean narrowing the kinds of people who get it in terms of how much they're making per year. So the last bill with 75,000 cap, you could sort of see that number negotiated. Instead of a 1.9 trillion bill, we could see something closer to 600, which is what sort of the ballpark of what Republicans are looking at. So basically more targeted means less money spent and fewer people getting money.
Well, Katya, based on, listen, the Bloomberg economics team is pretty amazing. And you guys have been, looking at the data points, looking at what folks are saying and the research that's out there, and looking at the impact that the past stimulus programs, the COVID stimulus programs have done. Do you think it makes sense to target those that need it the most? Does that make the most sense?
On paper, yes, but nothing in life happens as it's on paper. So, you can say, yes, let's target people in this narrow band, and in a perfect world, only those people would get it. But then you obviously miss a lot of people. The IRS and the government doesn't know your exact situation. I talked to Claudia Sahm previously at the Fed, who did a lot of research on this, kind of targeting stimulus checks. And it turns out that you actually miss a lot of people who lost jobs in the interim or who may not show up. And so at the risk of, missing those people, it's probably better to just give stimulus. And at the same time, Biden did promise it. Remember in Georgia, a lot of people are talking about that and saying, well, hey, hold on a sec. You can't just go back on this now. The $2,000 checks is sort of the promise that was made when he came in. So there's also the political angle as well.
Right.
Yeah, it just remains to be seen kind of if they can reach an agreement on
What's
that.
so interesting about this is if we think back to before the January runoff election, we did have some Republicans who were supportive of those $2,000 checks. So it's in some cases, it is a bipartisan issue. I mean, how are you seeing that evolve now?
No, absolutely. And you still have some senators and some Republicans who support the $2,000 measure because basically it's a popular program. People like money. But secondly, because this is unprecedented, we've heard that a lot during this recession, but it truly is unprecedented in that even past economic research, you can look at sort of what the stimulus, like Carol, you just mentioned previous recessions, what the kind of stimulus did in that case, it might not have the same effect this time just because of how different it is.
Well, as you guys who study the economy, I mean, does it make you a little bit nervous? Because, I mean, I feel like, Katya, the argument has been, let's overshoot. We're going to get to people who probably don't need it, but let's do everything we can to make sure that the economy, the drop, is not worse so that we can get out of this much more quickly. Does it make you nervous a little bit as someone who watches the economy when the numbers start to go, to a smaller check versus the $2,000 check?
I think it definitely has a lot of economists nervous. And frankly, like Wall Street economists, you talk to them and they say, yeah, the $2,000 checks are probably not the best way to use money. But overall, let's just get the money out there to make sure that we have like a really strong takeoff. And I hear that a lot more than the other side, which is let's narrow how many people get this money and how much goes out. I mean, I wrote a story over the weekend that says research shows that if you want like a kind of a bigger, more immediate economic boom, that you might want to beef up social safety net programs because those folks are going to go out and spend that money. But narrowing a check, you kind of get into all these debates and questions. And I think it's just, what I hear most often when I'm talking to economists, whether on Wall Street or elsewhere, is sort of just like spend out the money, let it do its work, and then let's kind of see the numbers and see how it plays out.
Yeah, exactly. Katya, thanks so much. Really appreciate that. Katya Dmitrieva, she is U.S. economy reporter at Bloomberg News on the phone from Washington, D.C., listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Doesn't it feel just a little bit quiet? I know we have this like massive snowstorm,
Oh,
but
it feels very quiet.
right? Like compared to like all the craziness of the last few weeks?
Yeah, unfortunately, not too many people on the roads here in Manhattan.
Yeah.
But I look outside and I can't tell if it's snowing or if it's just the wind blowing the snow off the building.
I'm not sure here either. Coming up, we've got the chart of the day. It's nice to know some things we can count on. Dave Wilson's going to be back in just a moment. First up, though, let's get back to your top business stories. Another check on that trading day. Hey, Charlie.
Hello there, and I do just want to begin with the travel note. Amtrak suspending New York Penn Station to Boston service because of all that snow. Also suspending service between New York Penn and Albany. Stay with Bloomberg for the very latest in our traffic updates. The Dow, the S&P, NASDAQ, they're all advancing right now. Broad-based rally underway, led by technology giants, as several strategists say the recent explosion of speculative buying will not derail the bull market in equities. Among some of those names, GameStop plunging today by 27.1%. Year-to-date, still up by 1,142%. AMC Entertainment up today by 4.3%. The Dow, the S&P, NASDAQ all advancing. NASDAQ 100, let's begin there, up 2.5%. NASDAQ Composite Index also up by 2.5%. S&P up 59, a gain of 1.6%. The Dow up 242, up by 0.8%. 10-year yield 1.06%. Now gold is up 0.8%, $18.61 the ounce. And West Texas Intermediate crude up 2.7%, $53.61 a barrel. Cannot ignore silver today. First of all, let's begin with the ETF, up 8.3%, talking about the iShares Silver Trust ETF, and silver futures, they're up now by 8.7%. So an update for U.S. equity markets. Coronavirus infections continue to show a slowing trend across many regions of the globe, including the U.S., though concerns remain about new variants. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, he told us the focus does remain on distribution.
Well, I think it's about making the doses and delivering them to the right people, including a lot of people who are at risk. In the United States, there's some very good reporting about essential workers who are out there and are incredibly vulnerable to getting sick, and they're struggling to get in line in some places for vaccination. I think they're going to be a really important population because it's through people who have to be out and about that the virus can really spread.
And among some of the vaccine names, Pfizer shares, they are down today by 0.4%. BioNTech down by 0.8%. AstraZeneca, the ADR is down 0.4%. Moderna is down 8.9%. Johnson & Johnson up by 0.2%. After the bell, Cirrus Logic up now by 4.8%. Rambus up by 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Right?
Rod Stewart?
Yeah. Yeah. Little Rod Stewart for you.
I like it.
I do too.
That's a nice one for today.
That's kind of perfect, right?
Dave, thank you.
Sure, anytime.
All right.
Give you something to start the week.
I like it.
Straightforward. You
Yeah.
know it. All that good stuff.
All right. So on this first trading day of February 2021, what do you got for us?
You know, if you're looking for a reason to believe in the shares of smaller companies, you may have to kind of hunt around a bit. You know, that's sort of the message that you can take away from the latest research provided by Jonathan Krinsky, who's the chief market technician at Baycrest Partners. He looked at the Russell 2000 index late last week, compared it with its 200-day moving average, a pretty popular gauge of price trends we talk about from time to time. Well, you know, if you go back to March 2000, when, you know, the bull market of the second half of the 1990s peaked, you saw the Russell 2000 surpass that moving average 200 days, by a bit more than 30%. So that particular high lasted more than 20 years. Here we are in 2021, and the Russell 2000 has been above that moving average by as much as 38.5%. So we're talking about, oh God, I hate to use this word because it's been so commonly used, unprecedented strength in smaller companies, relative to their past performance. So, I mean, people were falling all over themselves to buy them. That's sort of what you take away from this indicator. And, the way Krinsky sees it, this sort of thing just can't be sustained. So what did we see last week? The Russell 2000 down 5 days in a row, every day of the week. And even then, it took until Friday to get this, percentage down below 30. And, when I looked today, it was back above 30%. It just shows you how persistent the strength has been. And it's just something of a cautionary note, at least in Krinsky's view. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, these small caps have been on quite a tear. I mean, if this is a pretty reliable correlation, Dave, in that when we see this, that we should assume that we'll see a pullback?
Well, I mean, at the very least, it's something you have to watch for. I mean, that's why the chart itself has the Russell as well as the indicator I'm talking about, the percentage gap of the moving average, so you can sort of see over time what happened. Certainly in 2000 it worked out that way, and you can see a couple of times since then when the percentage got relatively high and stocks ended up pulling back. So, it's just something to provide a bit of perspective here.
Isn't it interesting, though, because I feel like for such a long time we were saying, okay, the small caps need to play catch up, and then all of a sudden it feels like they've done it rather quickly.
Caught up in a hurry, you could argue. Certainly in the last few months of the year, in 2020, we saw that. And, a little bit this year as well. I mean, you look at how the Russell's been doing. I mean, relative to the S&P 500, even with last week's declines, it's been holding up pretty well. So, just looking at the numbers here, Russell up 7.5% or so for this year. S&P 500 only up 0.6%.
How old is Rod Stewart? Let's go back to that for a second. He's 76 years old.
Wow.
Yeah.
That's not one of those ones that surprises me that much.
No.
You hear of ages and you're like, wait a second.
Yeah, exactly.
That one kind of works.
He's been around for a while. It's amazing how he continues to reinvent himself, right?
Yeah, it does.
Just kind of keeps going and going. Good stuff, Dave Wilson. Thank you so much.
Sure.
All right. Got a favorite Rod Stewart, Dave?
Well, that's right up there. And you realize
that's
the
a nice
recording
one.
is 50 years old.
Wow.
So he did that when he was 26? That's pretty nuts.
Yeah.
Pretty amazing. All right, Dave, thank you so much. Dave's going to be back a little bit later on with his stock of the day. Let's get back to world and national news. Nancy Lyons, what do you got for us?
Well, Carol, there's a meeting planned for later this afternoon between President Biden and 10 Republican lawmakers, and we're learning more about the GOP alternative to Biden's $1.9 trillion pandemic relief proposal. Bloomberg's Nathan Hager has more.
The $600+ billion proposal includes $50 billion for expanded testing, $40 billion for Paycheck Protection Program loans, and stimulus checks, but not the $1,400 the president's looking for.
They're proposing $1,000 checks, but the cap for those would be people who make $40,000 a year, and then there would sort of be a phase out, so sort of a smaller amount with a complete cutoff at those who make $50,000 or more.
That's Bloomberg Government's Emily Wilkins. The president's invited the GOP senators to the White House this evening to discuss the proposal. In Washington, I'm Nathan Hager, Bloomberg Radio.
House Democrats are pushing for Republican Congresswoman Marjorie Taylor Greene to be removed from her committee assignments. She serves on the Education and Budget committees. Greene has come under scrutiny for suggesting the Sandy Hook and Parkland school shootings were staged and that the 2018 California wildfires were started by Jewish space lasers. Dustin Diamond, best known as Screech on the hit 90s sitcom Saved by the Bell, has died at the age of 44. His spokesman says he was diagnosed just 3 weeks ago with stage 4 lung cancer. And singer Tony Bennett has revealed in the AARP magazine that he has Alzheimer's. His family says he was diagnosed in 2016 and is still able to sing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. One of the nice things about working from home is like your daughter brings you cookies and milk.
Oh,
which is what she's just delivering
really
for
nice.
me.
Wow.
And I believe they're warm cookies. So it's kind of really nice.
That is that is a nice perk.
It's a really sweet thing. It's something to look forward to from Arlo.
I know. Well, he's only 2 now.
I know.
So.
See him a few years.
Yeah.
So what do we want to talk about? Reddit. There's a story. Well, why don't you go ahead?
Okay, well, let's talk a little bit about, look, as we mentioned, Carol, the Reddit story, the GameStop story, it just continues to give. Reddit traders declaring biowar as shorted biotechs soar. So BioCryst Pharmaceuticals blew past a 5-year high as Reddit investors rallied around a call to start a hashtag biowar on the heavily shorted biotech that develops rare disease drugs. So this is by our colleague Kristen Flanagan, by the way. And we should note, if you think about the story when it comes to Reddit, it's been about several things, but mainly it's been about, messing with the shorts, right? Finding those stocks that are heavily shorted and look, literally, in the words of them, sticking it to the man.
Right, exactly. And listen, I think we're going to see it. Anything that's heavily shorted stocks, that's what they are looking for, right? And because it's worked so far. And as you said, sticking it to the man, sticking it to, the big investors, the so-called smart investors. It's kind of such a simple, pure play, Tim, if you think about it. And it's been a successful one for a lot of investors, a lot of retail investors right now.
It has, but it's not just the retail investors who've been successful.
No.
As we saw last week, Silver Lake Partners, not exactly a retail investor by any stretch of the imagination, the private equity firm, was able to cash out their AMC investment at a more than $100 million gain thanks to that rapid increase in the company's stock price last week.
Cameron Kreis has a great article, a story on the terminal. It's all about, wondering how many hedge funds ultimately got involved in those trades. So I'll put it out on Twitter, but watch this one.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks off session highs, but are climbing in a broad-based rally led by technology giants, as several strategists say the recent explosion of speculative buying will not derail the bull market in equities. S&P on track for its biggest gain in more than 12 weeks, up now by 64 points, a gain of 1.7%. NASDAQ 100 index up 2.6%. We've got the Russell 2000 advancing today by 2.5%. S&P up 63, up 1.7%, and the Dow up 269, up by 0.9%. Bottom line, U.S. stocks very close to session highs. 10-year up by 1/32 now. 10-year yield 1.06%. Gold up 0.7%. 1860 the ounce. West Texas Intermediate crude up 2.7%. 53.62 a barrel. Silver, talking about silver futures, they're up 8.5%, and the silver ETF up now by 8%, talking specifically about the iShares Silver Trust ETF. After the bell, a couple of closely watched earnings report in the tech world. Cirrus Logic among them, up 4.4%, and Rambus up now by 3.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Gotta say, I didn't see this coming, the rally that we have.
Not after last week, right?
Right? I really thought, and I thought because of the weather, it was going to be subdued, but certainly not. Let's get to the drive to the close. Ann Maletti is back with us, head of active equity at Wells Fargo Asset Management, and she has, they've got about, let me just look at my numbers here, $603 billion in assets under management, and she joins us on the phone in Milwaukee. And I said to everybody, I've been back at the office for a couple of months. I'm back at home, and I'm like, I forgot how to do this. How are you?
I'm doing well, Carol. How are you?
Doing okay. How do you see?
I don't think you forgot how to do it. I listen to you pretty often, and you got it down quite well.
Well, thank you. It's been a crazy. It's hard to believe that already January's done in terms of the market environment. How do you see it? How are you kind of making sense of where we are, maybe where we're headed? And do you feel like you have visibility?
You know, it's interesting, Carol. We're trying to stay focused on the fundamentals, and coming into 2021, we thought that that's what's going to matter the most. Might have one more round of stimulus coming at us, and that would be good for the market in the near term. But after that, fundamentals would drive the market. And then here we have what's going on certainly last week and this week, which is, I think, taking people's focus off of fundamentals, off of earnings season, off of things that matter. Certainly that's not what's going on at our shop. Our managers are focused on the long term and on fundamentals, but the near term is being distorted a little bit around some of this retail trading.
Yeah, I mean, I can't imagine a company stock increase like we saw in GameStop, changing the conversation about fundamentals. So what are you liking right now in terms of companies with strong fundamentals?
Well, certainly our managers have been focused more on the economic expansion and recovery that we expected, led by the stimulus, certainly, and we're seeing the numbers in the economy bear that out. But then followed up the second half by broader scale vaccination. And so really believe that the economic data will look good, and that will continue to bode well for the market. So industrials, financials were areas that our managers were getting into more broadly, small caps as well. And then the emerging markets look like another place that kind of got left a little bit more behind over the past 12 months. And our emerging markets and international managers continued to be very optimistic about the global recovery.
It's interesting you said small caps. I mean, that's certainly been an area, full disclosure, that I've been interested in too. And we've seen such a significant bounce back. Dave Wilson was just on, with his chart of the day and kind of looking at the run up that we've seen so far. Does any of it start to make you a little bit nervous, Ann, or are you guys still feeling pretty comfortable about small caps overall and continuing their move to the upside?
Well, I think what you have to be careful with small caps is the distortion that you can see from events like what's going on today, or actually over the last couple of weeks, right? So when GameStop can move from where it came from to being the largest component of the Russell 2000 index and drive a big part of that performance, that can distort a lot of the returns that we're seeing. So I think what we're trying to do is pick through different industries and different companies and really try to figure out which companies have the strongest earnings, the strongest cash flow, the strongest balance sheets, and focus on those companies for the longer term.
And you mentioned what happened in the markets last week. I wonder to what extent you're hearing from clients about that. I mean, are they starting to ask you about this stuff?
Certainly, our clients are very curious about this, wondering how it's impacting our managers today. They're worried about obviously whether or not there's broader systematic concerns, some of the things that you guys are all talking about as well. How long can this go on, and what will be, are there dominoes that are going to start to fall if this goes on for much longer? Those are the biggest questions that they have. And then certainly there's going to be some issues around the impact of performance. What happens when a stock like GameStop can drive the Russell 2000, what happens when you're trying to manage money against that? It's interesting. I mean, if you're buying an ETF of the Russell 2000 today or on Friday, you were buying more GameStop than anything else. And,
right.
and that probably wasn't intended, but that was the reality.
Well, yeah. It is interesting, though, about the role of retail investors and kind of what's happened in the last year and their role in the market. I mean, healthier market, do you think, Anne, if we've got more retail investors involved? And I know it's hard to maybe feel that way after the last couple of weeks, but you do wonder the impact and whether it's a good or bad thing.
I absolutely think it's better. The more people that have knowledge about the market, the better off we will all be. So over the past several years, as I've talked to my own kids and their friends, as they've been investing on, apps like Robinhood and other things, they've learned a lot about investing in companies and investing in the market. But it's been, small amounts of money, them really trying to figure out how to do research and learn about the companies they're investing in. That's different than what we've seen over the past week. And I think what I worry about, when I look at what's happened over the last week, is how many smaller retail investors will actually get hurt when this all comes to a rapid end, and how many of those retail investors will we scare away and scare out of the market. That's actually not good for our business long term. I'd rather see more people in the markets, whether they're doing it on their own or they're coming to us for more professional advice.
Yeah, I mean, but that when it comes to GameStop and the rise that we've seen there, it's hard to imagine this ending any other way. And we only have about 15 seconds left.
Yep, no, I think you're right. I think everybody has to realize that diversification is really important in understanding the risks, and the risks are very high right now in certain names.
And fundamentals. Ultimately, it's going to come back to fundamentals. Like if you have a business and it's growing, great. If you don't and it's not growing, that's going to ultimately show up at some point. Anne, good to hear your voice. Anne Maletti, she's head of active equity over at Wells Fargo Asset Management, $603 billion in assets under management, on the phone in Milwaukee. I forgot to ask her if it's snowing.
I know they got snow.
They got snow, right?
Yeah, I don't know if they're still getting snow.
Yeah, or how
but
much
we're
they
getting
got.
what they got.
Yeah, and I actually just looked out the window and it looks like it is still snowing.
Oh yeah,
just in case you're wondering.
Here too.
close.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A move higher today for the Dow, the S&P, and NASDAQ 100 index as well. Stocks advanced in a broad-based rally led by technology giants, as several strategists said the recent explosion of speculative buying will not derail the bull market in equities. Just about the biggest gain for the S&P in 12 weeks, rebounding from its worst sell-off since October. NASDAQ 100 index up today by 2.5%. NASDAQ Composite Index a little bit better, up 2.55%, up 332 points at the bell. S&P up 59, a gain today of 1.6%. Dow Industrials up 229, a gain of about 0.8%. 10-year yield 1.06%. Today we saw West Texas Intermediate crude up 2.8%, 53.65 for a barrel of WTI. Gold up today by 0.6%. Spot gold 18.59 the ounce, up 11.38 the ounce. Silver, big move there today. We saw silver futures up 7.9%. The silver ETF up today by 7.1%. So an up day for the Dow, the S&P, and NASDAQ. As for the market backdrop, Ann Maletti is Senior Portfolio Manager at Wells Capital Management. She was our guest moments ago right here on Bloomberg Business Week.
Here we have what's going on certainly last week and this week, which is, I think, taking people's focus off of fundamentals, off of earnings season, off of things that matter. Certainly that's not what's going on at our shop. Our managers are focused on the long term and on fundamentals, but the near term is being distorted a little bit around some of this retail trading.
And some of those Reddit names today: GameStop down 31% today. AMC Entertainment, little changed at the close, up by 0.3%. We are awaiting the latest numbers out of both Rambus and Cirrus Logic. So again, recapping, equities higher with the S&P 500 index advancing 59 points today, close to session highs, up by 1.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say. Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got to move.
On Bloomberg Radio.
All right, it is time to take a little bit of a deeper dive into today's close. As I said to you earlier, Tim, and we talked about it, just wasn't kind of the day I expected. Definitely more of a risk-on trade. 399 names in the S&P 500 higher today, 106 lower. Are you looking at the major industry groups?
I certainly am. And Carol, I got to tell you, I'm seeing a lot of green. It is not what I expected to see. Consumer discretionary leading the pack, 2.77% of an increase. Got to tell you, consumer staples almost in the red, up 0.02%.
Yeah, pretty wild. International Flavors was your top performing stock in the S&P 500.
Okay.
Let's see. I'm just looking at the
I'll listen.
Surging 17% roughly after announcing the completion of its purchase of DuPont's nutrition and biosciences business. So I believe, isn't that the dog food?
You are putting me on the spot, and I don't know the answer.
I don't know. Yeah, I might be wrong, or maybe it's, I don't know. Oh, sorry about that, everybody. But anyway, a big move in this stock. As I said, your number one gator finishing the day up about 16%. So pretty big move. So significant to see that. And, as Ann reminded us, there's earnings going on, there's fundamentals, there's people completing deals, people doing deals. These are things that fit into their longer term strategy. And we increasingly, despite what's going on with GameStop and some other things, ultimately we will go back to fundamentals.
Yeah, that's the big question. And look, I think we're going to learn a lot tomorrow when we hear from Amazon and the way that Amazon has done in the last quarter, the way that Amazon did in its holiday quarter, and how the company is thinking about 2021.
Yeah, absolutely. Let's bring in Bloomberg News cross-asset reporter Sarah Ponczek, see what she's been keeping an eye on. Sarah, I keep saying this over and over. It wasn't quite the trading day I expected. I think I just thought it was going to be quiet, little changes because of the trade, but I realized people were working from home before. Now we just have snow outside our windows.
Right, and no such thing as quiet these days.
No.
And today was loud in a different way. We've been used to the massive surges in GameStop and AMC lately. Today we saw a comeback really across the spectrum in markets. You look at the S&P 500 up 1.6%, the NASDAQ up 2.5%. That is the NASDAQ 100. But of course, this comes off of what was a pretty steep sell-off on Friday. So it's a relatively quick comeback. We didn't make up all the ground that stocks had lost on Friday, to be sure, but still a bit of a different tack. And at the same time, Charlie ran us through the numbers. GameStop closing down about 30%, AMC closing flat. But volatility is very well and very much still alive. AMC at one point was up 30% at one point today, and the stock paired all of those gains. So still plenty of volatility, but one thing that really jumped out at me is two indexes that we've been tracking very closely. Is one that's an index, it's an equally weighted index of the most heavily shorted stocks. So usually we've been seeing massive gains in this index of late. I'm talking last Wednesday up 9%, last Tuesday up 7%. Meanwhile, on those days, we've also seen an ETF that tracks long positions for hedge funds. So stocks that are most popular with hedge funds on the long side falling as hedge funds have been forced to degrowth. But today we actually saw that ETF, its ticker is BVIP. It was up more than 2%. And at the same time, we saw that index of the most heavily shorted stocks higher as well. Granted, not up that much, up just 0.1%.
Right.
But it's a difference in what we've seen of late.
I mean, I'm still having trouble wrapping my head around what the big difference was today versus late last week when we saw, the worst week in 3 months.
It's a great question. And the reality is not that much has changed. What did change coming into today was the fact that if you look at some of the brokerages, Robinhood in particular, they had eased restrictions on trading. Robinhood brought down restrictions on what was 50 companies to just 8 companies. Maybe you would have thought that would have helped some of these shares like GameStop and AMC more. What also changed, though, and two of my colleagues, Lou Wing and Katie Greifeld, wrote a story on this earlier today, is that we actually did start to see short interest as posed by IHS Markit, by S3, some of these data companies. We did see short interest fall. So whereas before, if you looked at GameStop, for example, short interest as a percent of float was 140%. Well, now that's come down to closer to, depending on which data platform you look at, anywhere from between 40 to 50%, say. So we have seen many of these shorts already squeezed out.
Right.
Therefore, means that maybe a lot of this juice in the run-up has been squeezed out as well.
Listen, not exactly a tired trade, but certainly a lot more tired than it was. And I do also think that we're now realizing that if things start to get a little bit crazy, these platforms are going to shut it down. Like, I think if you're a Robin, you know what I mean? I just think kind of the churn maybe has changed a little bit. Sarah, good stuff as always. Happy Monday and good to hear from you. Bloomberg News cross-asset reporter Sarah Ponzak. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Dave Wilson, you're up. What is your stock of the day?
Arcutis Biotherapeutics, Tim. It's a developer of treatments for inflammatory skin diseases. The company was founded in 2016 and just passed the first anniversary of its initial public offering last weekend. The ticker is ARQT. Arcutis sold shares in the IPO at $17 each. There was 28% on the first day of trading and peaked in March with a gain of 140%. Now, the shares have since bounced around, though they've held above the initial price. Arcutis rose today to a 7-month high after final stage study data on a proposed psoriasis treatment was well received. Based on the results, the company said it would apply for U.S. regulatory approval in this year's second half. You're talking about a cream that people put on plaque psoriasis. Now, Arcutis' results led Cowen to raise its 12-month share price estimate by 45% to $80. That's the highest projection of 6 analysts in a Bloomberg survey. And all those analysts, by the way, have some version of a buy rating on the stock. Now, Arcutis closed at $35.58 after recording the biggest gain since its record-setting day back in March. The shares climbed more than 30%.
There's a cream for everything.
That's great. I'm grateful for it.
Hey, my mother
what?
had psoriasis back in the day. If she had something like this,
it's huge.
It might have been a different life. You never know.
I know. And Dave, thanks for providing an assist. That DuPont, that brand, it's like solutions for food, consumer products, and all these different things. So when I was stumbling, Dave was providing an assist. Dave, thank you. Let's get back to world and national news. Over to Nancy Lyons. Hey, Nance.
Hey, Carol. Well, President Biden will be meeting in about an hour with 10 Republican senators to discuss their smaller coronavirus relief proposal, even though Democrats are getting ready to push legislation through Congress without support from the Republicans. White House Press Secretary Jen Psaki says today's meeting will not be a negotiation.
This group obviously sent a letter with some outlines, some top lines of their concerns and their priorities, and he's happy to have a conversation with them. What this meeting is not is a forum for the president to make or accept an offer.
Biden's plan calls for an additional $1.9 trillion in federal spending, while the GOP plan calls for about $618 billion in federal spending. Well, federal agencies have approved an at-home test for COVID-19 and given the company that developed it $239 million to ramp up production.
The Australian firm Illum plans to open a factory in the United States. White House COVID-19 coordinator Andrew Slavitt described the nasal swab test.
These are over-the-counter, self-performed test kits that can detect COVID with roughly 95% accuracy within 15 minutes. They can be used if you feel symptoms of COVID-19 and also for people without symptoms so they can safely go to work, to school, and to events.
Slavitt also urged medical facilities that have been holding back vaccine to ensure supply for second doses that it's not necessary. Adequate supplies will be flowing. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So the most read story on the Bloomberg in the past 60 minutes, Tim, is COVID deaths are starting to drop in every part of the United States. I just wanted to bring that out to everyone. It's the latest sign of some relief, considering it's been a rough couple of weeks, a rough month, to say the least. What?
Yeah, I do want to say one thing for those listening on the terminal who have access to the terminal. If you just type in CVID GO, you get great access to different charts that show cases, it shows deaths, and you can compare countries throughout the world. And one thing that I'm seeing, and I check this a lot, is it is looking like we are on the other side of that peak. And the big question that I have is how long is this going to last with those new variants?
Right, exactly. It's something that we tried to get to, certainly with the J&J interview that we did last week, because they were finding that, especially in the testing that they were doing in South Africa, that their vaccine was shown that it did apply that variant. But I agree. It's why, right, there's been such a push to get it done, because we want to get ahead of these variants. Otherwise, we're going to be facing with that and waiting for the vaccines to catch up with that.
You know, I did on Quick Take earlier today, I interviewed Dr. Gabe Callan of Emergency Management at Johns Hopkins Bloomberg School of Public Health.
Yeah.
And I asked him the question about, when will we start to see, or do you think we'll start to see the spread with variants like we did here, like we did in the UK, here in the United States? And he said, look, it's not a question of if, it's a question of when. It's got to already be here, and it's got to be spreading. It's just, and it reminds me of what we saw in February when we learn about what was happening in northern Italy.
Right.
And then that was our reality a few weeks later.
Yeah, absolutely. So that's our most read story on the Bloomberg in the past hour. I do want to point out, too, that our most read story in the past 8 hours has to do with Goldman basically tightening up the golden handcuffs for a bunch of traders. And basically, it's asking a bunch of their traders, the junior level, to sign a 6-month non-compete clause to get their bonuses for the breakout year. That's pretty wild.
It is wild, but you know what? They want to hold on to their talent.
Yes, they do. They do. They usually do that with senior level traders, but now they're even doing it with junior level. I'll put it out on Twitter. This is Bloomberg.
continues. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Best day for the U.S. stock market in 10 weeks. NASDAQ up today by 2.55%. NASDAQ 100 index up 2.5%. S&P up 59, a gain of 1.6%. Dow Industrials up 229, higher by about 0.8%. Stocks gained after several strategists said the recent explosion of speculative buying will not derail the bull market in equities. GameStop shares plunged today by 31%. AMC Entertainment up today by just about 0.3%. After the bell, Cirrus Logic reported adjusted earnings per share for the third quarter that beat the average analyst estimate, but shares right now of Cirrus are down 2.9%. And Rambus forecast product revenue for the first quarter of $27 million to $33 million. RMBS on the ticker, shares right now down by 5.1%. 10-year yield 1.06%. Gold up 0.7%. Silver surging today by 7.1%. That actually was the iShares ETF. Silver futures up today by 8.2%. Crude oil West Texas Intermediate up 2.8%. WTI 53.65 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we mentioned this earlier. The name that seems to keep popping up with the trading frenzy story, whether it's silver today or GameStop last week, it is Citadel. Sri Natarajan is finance reporter at Bloomberg News. He is with us on the phone in New York City. Hey, Sri, good to have you here with Tim and myself. It does feel like I said Citadel is the Kevin Bacon of, I feel like, the GameStop story.
I love that.
So tell us Go ahead.
No, I'm saying you're right, Carol. Like no one's described it to me in quite such colorful terms like you just did, but it does feel so true. Everywhere you look in this whole GameStop, Robinhood, Reddit saga, the name Citadel does keep popping around. Whether it's because of their hedge fund business, which had to rescue Melvin Capital, the hedge fund, which frankly was put in hospital because of all the trading around GameStop, or its market-making business, which has so much to do with Robinhood, because they execute a lot of the Robinhood trades and the controversy around that. So undoubtedly, there's been a ton of fascination, speculation, and frankly, just a ton of conspiracy theories around Citadel and its billionaire owner, Ken Griffin.
Okay, so can you go through some of those conspiracy theories without giving them credence? I mean, I want to put you in a position to be responsible about them. But what was the concern here?
I mean, if we really want to talk about being responsible, what we would suggest is people just pop over in some of these Reddit threads and see the kind of things being said about Citadel and Ken Griffin. But you know, even at the very base level, and a lot of people in positions of authority have come out and raised those questions without any credence proof, whether it's stuff like saying, you know, Citadel was personally responsible for Robinhood shutting off trading on GameStop, for instance. They believe Citadel did it to help their hedge fund friends. A lot of the other people who follow the plumbing of the market say that doesn't quite make sense because Citadel Securities makes a lot of money when there is outsized trading, when there is high volume in names like that. Or the even more bizarre one where people connected the Biden press secretary, Jen Psaki, with a Citadel portfolio manager who happens to be, it now appears, a distant relative who may or may not even have spoken to each other ever, but people connected that as proof of some sort of dark arts of the firm. Like, that is the example of how Citadel has been puppeteering and trying to stamp out this retail rebellion, if you may.
So, okay, so then how are we, listen, this is why we turn to folks like you, Sri, is like to educate us and our audience about what we really need to know and understand the relationships. But it is kind of fascinating that Citadel, it feels like they've been hurt in some regards on all of this that's been going on in the last week, but they've also benefited at the same time, correct?
That's absolutely right. And that is a result of where we are overall with the evolution and growth of Citadel. In 2008, this firm that was started by Ken Griffin, now 3 decades ago when he was trading convertible bonds out of his Harvard dorm, has become a mainstay of the market. In 2008, they were on the brink of extinction, but since then, it is this all-powerful entity. They have a hedge fund that's been super successful and that rakes in money. They have the securities business that has really grown rapidly in the last few years, to the point where people at Goldman Sachs and other banks, other big U.S. banks, will tell you when you talk to them that they're not so much concerned about the European banking competitors as much as they're concerned about the rise of firms like Citadel. That's how powerful it has become. So it should be no surprise that when a story like this involves so many legs, that you will see Citadel popping up in a number of these places, and that also makes them sort of a target that everyone likes to rage against.
Citadel Securities, it's one of the biggest sources of Robinhood's revenue. Remember, this is a free trading app, but it gets payment for order flow. Can you explain Citadel Securities' role in that?
Right. I mean, Robinhood, when it has to execute a lot of these orders, goes out there and seeks bids for people who would like to pay for its order flow so that they could effectively execute those orders at an institutional level. And Citadel happens to do a ton of those. I was looking at some chat last week where our own ETF analyst, Eric Balcunas, looked at some figures that had appeared in a Wall Street Journal story on the amount of Robinhood trades around GameStop that Citadel had executed, and his calculation was just in a matter of weeks, Citadel may have just made $100 million off of that. I mean, that was just a back of the hand calculation, but that gives you a sense of how much is at stake there. And like Larry Tabb, our own analyst, who's done a fantastic job in understanding the intricacies of the market, he talks about it very well. He said, look, at the end of the day, the more shares you trade, the more breadcrumbs there are to take. Now, a lot of these shares, you're making pennies on the dollar or even less, but on a high volume, that adds up, and especially on names where there is a much wider bid-ask spread. Larry rightly points out, it's not necessarily breadcrumbs anymore, so there is opportunity to make a lot of money.
Well, listen, as you and Kathy Burton have done in this story, and I'll put it out on Twitter, I mean, just kind of tying it up and really giving us the deep dive and understanding where Citadel kind of fits into this, because they certainly have come up a lot. Hey, Shri, thank you so much. Shri Natarajan joining us. And as I said, I'm going to put his story out on social media. He's our finance reporter at Bloomberg News on the phone in New York City. I mean, it is... the financial system has evolved and changed a lot. And especially we talk about disruption, it's happened and you have these different players involved.
Yeah, but sometimes it's the traditional players that are aligned with the startups, like in this case.
Exactly. And it takes something like this for it to come out and really understand how deep those relationships are. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I've been looking forward to this conversation for a while. We're going to catch up with
18 years?
Exactly. I have so many questions as I get ready to pay for college for my daughter. Ron Lieber is the Your Money columnist over at the New York Times. He's got a new book out called The Price You Pay for College. So we've got lots of questions for him.
Yeah, and how much is it going to cost for my 2-year-old to go to college in 16 years?
It's going to be like $1 million.
I know.
Get ready, babe.
It's hurt. I'm hurting. I'm sweating right now.
All right, let's get another check on your top business stories. Once again, over to Charlie Powell. Hey,
thank
Charlie.
you very much. And here's what's going on. Cirrus Logic shares down 7% after hours. Fourth quarter gross margin forecast fell short of the average analyst estimate of the midpoint. Rambus had its fourth quarter loss widen. Sales missed estimates. Shares now lower by roughly 3%. On Wall Street, it was an up Monday. Stocks had their biggest rally in about 10 weeks. Several strategists saying the recent explosion of speculative buying won't derail the bull market in equities. Among some of those names, for example, GameStop plunging 30.7% today. AMC Entertainment eking out a gain of 0.3%. Well, as for those high-flying chatroom stocks, Mona Mahajan is director of U.S. investment at Allianz, and she was interviewed this morning on Bloomberg Television and Radio, telling us she's wondering about the end game.
Really, over time, how does this end? Does GameStop or an AMC come back down to its fundamental value, which, if you look at average price targets by analysts, GameStop at $13.50, AMC at $2.50, or, do we get some sort of regulation in the interim? Are market forces going to dominate? And then finally, something we've been thinking about as an industry and as a financial services firm, are we going to need a new set of analysts that just kind of go through and comb through message boards, social media?
The S&P 500 index up 59, a gain today of 1.6%. The Dow up 229, up 0.8. NASDAQ up 332, up by 2.5%. 10-year now down 3/32, 10-year yield 1.07%. Gold up 0.8%, 1861, higher by $14 the ounce. Silver today, silver futures up 8.6%. SLV, that is the iShares Silver Trust ETF, up today by 7.1%. West Texas Intermediate crude up 2.4%, 53.46 a barrel. Alphabet's Google has signed a 6-year deal with Ford that will bring Android technology to the automaker's cars and cloud services to its factory floor in a triumph for the internet giant over rival Microsoft. Shares of Alphabet up today by 3.6%. Alphabet reports earnings tomorrow. Ford up 2.9%, Microsoft up 3.3%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So student loan debt, check it out, everyone. We've talked about this before, sitting at nearly $1.7 trillion. As a parent who has spent the last year going through the college application process with my high school senior, I've been really looking forward to talking with our next guest. So I know kind of what my money will get for me. And my daughter, more importantly. Ron Lieber is the Your Money columnist at the New York Times. He writes about personal finance for the Times, before that at the Wall Street Journal, my alma mater. His new book is The Price You Pay for College, an entirely new roadmap for the biggest financial decision your family will ever make. Ron joins us on the phone from Brooklyn. Ron, great to have you here with Tim and myself. Welcome. So tell us about this book, what you set out to do, what you wanted to find out, and kind of peel back the layers of this process.
Sure. So this is a book that was born of a problem in my inbox. Each spring I was hearing from otherwise sophisticated people, successful ones who run organizations in New York City that you've probably heard of, who felt like they'd been run over by a freight train when they got to the end of this and realized that they had no idea how the levers of discounting were being pulled, not just for people with demonstrated financial need, but for affluent people who were getting discount offers anyway, and they just had no idea. And this went on spring after spring. And I finally realized, wow, I not only need to explain this to people, but we also need a better set of questions for parents who are trying to figure out whether, Princeton is $200,000 better than Rutgers or Mount Holyoke is $2,000 better than UMass. We just needed a better set of questions, and we needed answers from the schools and the data that they do not like to give up.
Ron, I didn't graduate from college that long ago, but it's like my alma mater is like almost twice as expensive as it was when I graduated back in, 2006. How does this happen?
Well, there are a couple things going on here, right? There are list prices, right? Retail prices, the rack rate, like the price tag you see on the back of the hotel room door. And then there's the price that everybody is paying, right? And so on the whole, something like 89% of all undergraduates nationwide get some kind of a discount. It's either through need-based aid or this so-called merit aid that comes regardless of your ability to to pay. And may in fact have nothing to do with your grades and SAT scores, or very little. So it gets complicated, but the farther you go up the food chain to the most selective publics and privates, the more likely it is that people are paying full price. And at some of these institutions, as many as 65% of the families are paying full price.
So what seems so crazy to me, Ron, is why don't we just mark the price like it should be? Because I feel like we're on this crazy, hamster trail, and it's just schools have to raise a lot of money for their endowment, and people have to donate a lot of money for it. And I feel like the cost of the school has just gone on, and there's just this weird thing that's going on. Why don't we just set the price as it is, what we're getting, and maybe it would make it more affordable that you wouldn't need to have so much need-based aid go out.
I wish it was simpler, right? But we're generally talking about two different kinds of schools, right? We're talking about the public ones and the private ones. And then the private ones themselves get subdivided because there are, private super selective schools that do have endowments that throw off a fair amount of income each year. But then there's a whole mess of private colleges and universities that are extremely tuition driven, and they don't have endowments that throw off enough money to, support the institutions. And so there's a transfer going on of, higher income, higher price tag people subsidizing the lower price tag people.
Right.
And so, you ask about this notion of a tuition reset, right? Why don't they just lower the price if everybody's getting a discount anyway? So that would pose two problems. First of all, there is this theory in the higher education marketplace known as the Chivas-Regal effect that's based on a legend that may not even be true, that at one point in the past, Chivas-Regal tripled its price and quadrupled its sales overnight. And so these schools feel like if they lower their list prices, that people will think less of them. And then at just about every school, though not all of them, there are a few people who still pay full price, particularly international families or just people domestically who are just thanking their lucky stars that their kid got their act together and they're happy to write a check of any size, right? You lose that revenue. You lose that incremental revenue if you lower the list price.
Listen, hold on to that thought, Ron. We have to do some news, but we'll come back and continue this conversation. I feel like everybody's just stopped in their places because we all want to understand this because it just doesn't always make sense. We'll come back with Ron Lieber and talking about his new book, The Price You Pay for College. In the meantime, back to Nancy Lyons with a check on world and national news. Hey, Nance.
Hey, Carol. Officials say in January, the U.S. recorded more than 95,500 COVID-related deaths. That's the worst monthly total since the pandemic began. On the plus side, though, it is expected there will be some improvement in February. During today's White House Coronavirus Task Force briefing, coronavirus advisor Andy Slavitt told folks that they have a big contract now for easy at-home test kits.
These are over-the-counter, self-performed test kits that can detect COVID with roughly 95% accuracy within 15 minutes.
The Department of Defense is investing $231 million to scale up production of these tests to a predicted level of 19 million a month by the end of the year. President Biden will be meeting with 10 Republican senators at the Oval Office this afternoon to hear more about their $618 billion counteroffer to his $1.9 trillion COVID-19 relief package. But congressional Democrats are not waiting on a compromise proposal. Bloomberg's Emily Wilkins says they feel they have the upper hand.
a number of Democrats, particularly progressive Democrats, have said that, you know what, we control the House, we control the Senate, we control the White House. We need to move aid for the American people. This cannot be a repeat of 2009, where we didn't pass enough federal aid to combat all the effects of the 2008 recession.
We do know the Republican proposal features a scaling down of stimulus checks to $1,000. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Tim, I'm just going to say I am bullish on Elon Musk stories because there is a lot today.
Yeah, is this how I'm going to be able to afford to send my son to college? Just buying Bitcoin? That's the big question. That's to come when we get back with Ron Lieber. A lot of Elon Musk news today, Carol.
Yeah.
I didn't stay up late enough last night to listen to him in Clubhouse.
Yeah,
We're going to get to Clubhouse in just a second.
Yes.
But he said so much. He talked about monkey brains. He also talked about Bitcoin. And because he talked about Bitcoin, he sent ripples through the price of Bitcoin after declaring that he's a supporter of the largest cryptocurrency.
Okay, first of all of our listeners are like, wait, did you say monkey brain?
I did.
And
I
he
did.
Because apparently Elon Musk came out and said one of his startups has a monkey with wires going into its brain that's able to play video games. Musk says he's a happy monkey. I'd like to ask the monkey myself to see if he's really happy, just to put that out there. And this was where he was speaking on Clubhouse, right?
Exactly. Yeah, he talked a lot. He really talked about a lot of different things. I would encourage everyone to read Stevenson's sort of summation of everything that he talked about last night. But his reference to monkeys was about Neuralink Corp. That's Musk's startup that is developing a brain-computer interface. The company has put a tiny wireless implant into the skull of a monkey who can, quote, play video games with his mind.
Yeah.
Wow.
That is just, I got to say, one thing I love about Elon Musk is he's just going lots of different places, and I find that kind of fun to see. He's really pushing it, We talk about disruption. This guy is certainly disrupting the world, whether it's this Neuralink, whether it's the Boring Company. I should point out, too, that I think Emily Chang over on our TV side is going to have the Clubhouse co-founder on with her, I think.
That's fantastic.
Today.
That's fantastic. I do want to say that I think this story about Elon Musk is as much about Elon Musk as it is about Clubhouse.
Yeah.
And this is like a moment for Clubhouse. The company was valued at $1 billion. It went from 3 million to 5 million users in just 10 days.
Yeah, everybody's like now Googling, wait, what's Clubhouse? What's Clubhouse? I need to know.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Atos, that is a French IT outsourcing company, said to be planning to walk away from talks to buy DXC Technology. That headline from the Bloomberg Professional Service. After the bell, we heard from Rambus. Shares lower, sales missed estimate. Shares down by 6%. Cirrus Logic down more than 7% after hours, after its fourth quarter gross margin forecast fell short of the average analyst estimate at the midpoint. Stocks had their biggest rally in about 10 weeks as several strategists said the recent explosion of speculative buying will not derail the bull market in equities. S&P up 59 points. That was a gain today of 1.6%. The Dow up 229, up by about 0.8%. NASDAQ up 332, up by 2.5%. 10-year down 430 seconds. 10-year yield 1.07%. Gold up 0.7%, 18.60 the ounce. Silver today, silver futures up by 8.6%. The iShares Silver ETF up by 7.1%. West Texas Intermediate crude up 2.4%, 53.45 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. Let's get back to our guest, Ron Lieber. He's the Your Money columnist for the New York Times, and he's also the author of The Price You Pay for College, an entirely new roadmap for the biggest financial decision your family will ever make. I'm still having trouble, Ron, getting my head around the question why college tuition has grown so much more quickly than inflation, especially over the last 30 years.
Sure. Well, let's start with the state institutions. So what's going on there is the subsidies from the state legislatures have fallen. In the last big recession in 08, 09, 2010, they just cut this to the bone. And the easiest thing for the state universities to do to make up the difference is to raise the prices to the people who live in the state, and also to try and attract more people from out of state and charge them even more. With the privates, it's a little bit different. And what they said to me over and over again when I was in the office of these presidents demanding the same information that you're demanding from me, they said, look, what do you want us to do, right? 65 to 70% of our costs are professors, administrators, and staff. And, if you believe the Wall Street Journal editorial page, we've got an administrative bloat problem here because of all of the regulations. But the regulations come from the legislators that we all vote for at the ballot box. And we as parents want our kids taken care of. We do want our kids with mental health issues and disabilities to be able to access these institutions. We want our daughters on the ice hockey, in the ice hockey rink the same way that the guys are. And to keep track of all of this stuff and make sure that all students are well served and equally served does require trained people, and they are not cheap.
Wow. Okay.
Well, that's interesting.
There are a lot of reasons. It's not because they need to mow the lawn.
Most of these institutions are not growing that much geographically, and so the lawn only costs so much. Now, things like lazy rivers and climbing walls, these have become sort of like totems and boogeymans, for people who think college spending is out of control. But this is the manner in which our kids have become accustomed, right? I mean, many high schools have climbing walls now, and we're the ones who take kids on vacations to places that have lazy rivers. And really, there's only a couple dozen lazy rivers in all of higher education. So, it makes for a nice headline and a funny talking point, but these are not the reasons why college costs a lot of money.
But I want to go back to what you said, because I do think that there is a belief in this society in many ways that the higher something costs, the better it is. And we definitely apply it to education. So what's your advice to parents who, I just went through this with my daughter, and the thing is, doesn't feel like that there's many cheap schools, inexpensive schools out there anymore. But what's your advice as someone goes through this process with their student?
Well, I'd start by ignoring the list price altogether, the retail price. You've got to determine if your family is going to have any financial need as defined by the financial aid office. You've got to determine if the schools that you're interested in do any discounting on the basis of what they refer to as merit, which, may have something to do with the grades and the SAT score, but a lot of other things, in your kid's portfolio. And look at what the average net price is, right? And so that may not blow your mind quite as much. But it is true that there are plenty of people out there making choices between $300,000 schools and $100,000 schools over 4 years. And there you've got to ask basic questions about what college is for, right? Is your kid there for the education because they want to get into a, top 5 marine biology PhD program? Are they there because they want to be in line at Y Combinator or Kleiner Perkins at the age of 24 for startup money? If that's your goal, you may need a $300,000 school. But, it just depends on the kid and what they intend to do with themselves while they're there.
It sounds like the system is a little broken, Ron. What do you think? I mean, do we need to change this? This is a lot of money.
So here's the thing, right? My role at the New York Times and what I consider to be my role in life is just to help people work within the system as it exists and beat it when necessary. But I'm all for breaking it. The problem is, I have no beef with people who think this is all ridiculous, right? There's so much complexity built into our personal financial lives, and so this just seems like a natural, logical extension of that. But how exactly would we dismantle this, and with what political will? We can barely get it in a situation in Washington where even $10,000 of student loan debt is, cancelable or forgivable. I mean, that's going to end up being controversial. So, free college for all, free college for people who have under $150,000 in household income. It's a debate that I think that we should have, but I just feel like politically we're pretty far from getting there on a nationwide basis. And so I'm just trying to help people navigate the system as it exists.
All right. So 2 things that somebody should do when they're working with their kids for college?
I think you should start early with the savings if you possibly can so that you have more choices. And then I think you need to be emotionally honest with yourself, with your spouse if you have one, and definitely with your ex if you've got one of those, about the fear that you have about the process, the guilt you may have, any snobbery or elitism that may be at play, and that'll help you make sort of clear decisions. And then get everybody together, including your 14-year-old after 8th grade, and have an honest conversation about what you think you'll be able to pay and what you might be willing to pay or borrow, and what the difference between those 2 things might be. Because in my reporting, that was the most interesting part of the market, where schools realized that people with the ability to pay no longer had the willingness to pay these crazy list prices, and that's where the bargains are to be had.
That's really interesting. And what type of schools are those typically?
Well, imagine a combined list of all undergraduate institutions in America ranked roughly by selectivity.
Right.
And so if you start at slot 40 or 50 or 60 or so, that's where the action starts. Because people are still willing to pay full price for Northwestern. They're willing to pay full price for Carleton College, but they're not willing to pay full price for Oberlin in many instances. And they're not willing to pay full price, for schools like it, right? So right there is the sweet spot where they're starting to throw $20,000 coupons at 17-year-olds.
Got it. Yeah, well, it's different from the reach, the target, the safety list that most kids are advised
you sound like
to
you know
come
that
up with.
very well right now, Carol.
Oh my God, do I know it well. Ron, thank you so much. Really appreciate it. Ron Lieber is the Your Money columnist over at the New York Times. His new book, The Price You Pay for College, an entirely new roadmap for the biggest financial decision your family will ever make. School is 3-4 times what it cost me.
Yeah, and